Welcome back. It is a day of a lot of primary issues. So let's talk about another one which is hitting D Street now. Stationery product maker Flair Writing Industries, near 600 crore rupee IPO is opened up for subscription. Half of that would be an offer for sale. The other half would be fresh issue too. So 288 to 304 rupees price band. The company seeking a market cap of 3,200 crore thereabouts post-listing. So to discuss this, we have Mohit Rathore, who's the whole-time director, and Vimal Chand Rathore, who's the managing director of the company, joining us in our studios. Thanks a lot, gentlemen, for joining in. Mohit, Vimal Chandji. You have a utilization of close to 77% as of the first quarter of this financial year.
Yeah.
You are also adding some more capacities with the funds that you raise in this IPO.
Yeah.
Just wanted to understand, at peak, what could your revenues be and what are the number of pens that you can sell at peak?
Yeah. So thank you for having us. Just to give you a perspective about the industry and about the IPO. So currently we are raising about 666 crores, out of which we have already, raised done the pre-IPO allotment to Volrado Funds, which is a part of Enam Group, and balance we are raising in the public market, out of which 292 crores is the primary, in which 143 crores is going to go in greenfield and brownfield expansion, which is going to increase our capacity in all the verticals that we are in, be it writing instrument, be it a creative and stationery market, or be it the vacuum steel bottles.
Yeah.
And other than that, 43 crores is going to be repayment of debt.
Okay.
And 77 is going to be the additional working capital, and balance is going to be the general corporate fund. And just to answer your question about the capacity, so after this entire capacity expansion goes in place in next 18 to 24 months, currently our capacity is around 200 crore pens annually. This will go up to 235 crore pens annually.
Okay.
And last year we sold about 135 crore pens. Of course, because the production was built up gradually over the months. But yeah, going forward, we're going to use around 75% of the capacity what we have, because the optimum manufacturing capacity in our units is about 75-76%. Because of the kind of product portfolio what we have 700 products.
Yes.
So there's a lot of downtime in changing of products and all.
Lovely. Good to have you all gentlemen in the studio, and congratulations, coming to the markets as well is an achievement in itself, and from there on, the markets test you. So let's get a couple of aspects going. You all are roughly at the mid-70s in terms of utilization levels. You're doing around 250 crores on a quarterly basis.
Okay.
Yeah.
If I extrapolate that number, with the current capacity, you can do close to 1,250 crores. That should be the ballpark number that I'm working with. You can correct me on that number.
Yeah.
Now you're putting on investing money for brownfield and greenfield.
Yeah.
So that total sum, what could the revenue potential be? At current reckoning, I calculate that it could be 1,250 plus what you're going to spend. So optimal revenue level, what can you reach? We're not asking for a guidance about what you're going to achieve. We're asking about optimal. Please go ahead.
Yeah. So if you look at our historic numbers, we have been from 2017 to 23, we've been growing consistently at a CAGR of 14%.
Yes.
So going forward, also we are projecting a similar kind of growth, in next 3 years. Of course, we are adding another entire new vertical, which is in terms of steel bottles.
Yes, right.
Which would add to the total top line. And other than that,
So,
basically we cannot make any,
give us a number. 1,250 crores is your potential right now. You're going at roughly around 1,000 crores because you're doing it roughly around 75%. Post this expansion that you're talking about, the 200 crores or 150 crores that you're looking to spend, what is the asset turnover? So then we'll get the potential from there. If you could tell us that, point number one. Point number two, your debt, you're repaying some part. What does your net debt come down to post this?
Yeah, the present net debt is 130 crores.
Okay.
So we are paying only 45 crores of the term loan.
Got it.
And the balance we will keep in the company only. So our debt will reduce to only by 45 crores.
So 90 crores.
95. Yeah.
90
so that is basically on the working capital.
And revenue potential, how much?
So the revenue potential, if you look at it, the asset to turnover ratio is at 2.8%, 2.8 times.
Roughly, you can get close to around 400 crores from that 140 crores.
Sure.
In
So
next 2 years.
1,650 crores approximately.
And next
You
2-3
know,
years.
I was just doing a basic calculation. Last year, you sold about 130 odd crore
Yep.
pens. You did a revenue of over 940 crores. That
Yeah.
equates to a realization per pen of 7.5 odd
Yeah.
rupees. You multiply that by, 175, 176 crore pens, which would be 75% utilization of
Yeah.
your increased capacity. That yields a revenue of close to 1,500-1,600 odd crores.
Yeah.
So that would be
Yeah, that you can roughly say that.
Yeah,
okay.
in next 3 years. Yeah.
Now, this is an industry which is highly commoditized with low brand loyalty because, you go to a store, you say, okay, this is the pen that I want, and whatever is the
Yeah.
available pen out there, one buys it. So in an industry as competitive and, brand agnostic, how do you maintain your margins and what is a steady state margin for you?
So I would say it's a combination of a lot of things. If you compare Flair with the peers, the combination, you can say right from the production setup, what we have very, very lean manufacturing setup where we take care of the production cost. At the same time, we have a huge distribution network catering to more than 315,000 retailers and wholesalers.
Yeah.
The legacy of brand for 50 years and the unique mix of product portfolio. So we would be one of the very few companies in India manufacturing from 5 rupee MRP product to 3,000 rupee MRP product across various brands.
So margins around that 20% mark are sustainable according to
Yeah,
you?
so 19.5 to 20% is what we aim for. And going forward, if you look at historic and going forward also, we would be at the same levels.
What about your mix between domestic and exports? I'm looking at exports, I think, as a percentage of your revenues have
the
come down.
export is around 20% and
Yeah.
the revenue, domestic sales is around 80%.
So where do you see this number stabilize? It'll be 80,
Yeah,
20?
it will be we are in the export business for the last 45 years. We started our export in 1980.
Right.
So last 40 years, we were the largest exporter from India. And we are confident that we will be able to maintain that or we will increase the export basic point something.
All right. Final question before we let you go. You are looking at other avenues as well. Steel bottles, steel tubes is one of them. Currently, how much do you do from non-pen or non-stationary businesses? And with this steel addition, how much more will be the revenue addition because of that?
Yeah. So if you look at last year's top line, what we did was around 953 crores.
Yeah.
So in that, other than writing instruments, there was hardly any,
Okay.
top line was on only 6 to 7 crores.
Right.
But going forward, as we have entered into steel bottles and vacuum flask manufacturing, so basically just to give you a perspective, so we entered this industry because we have a very old relationship with one of the OEM manufacturer in US. So he gave us an idea of as their China Plus One strategy to manufacture steel bottles for them.
Okay.
And we grabbed it because looking at the target audience, it was the same because school kids and office goers and home. So we grabbed it, and it was also a perfect replacement of China imports.
So
because,
short point, non-writing instruments versus the others.
Yeah,
what would be-
presently there is hardly any
anything.
business.
So
but
how much
in
does
the
that go?
future, with the still bottle business, we are expecting to have a substantial business from
Substantial. You want to quantify that? What percentage will
It's
come
very
from
difficult because
non-stationary?
we had to start, but we already set up 3 plants in for manufacturing the bottles, and for 2 plants we already got the order from our US customer.
Okay,
so
all
it
right.
is going to be substantial business.
Okay, gentlemen, we thank you all for coming down to the studio, giving us a fair insight into the business. We wish you all well, and on listing, we invite you all on the channel yet again to give us an outlook, and maybe we'll get more concrete numbers from that.
Thank you so much.
Wish you all
Thank you
the
so
best.
much.
Thank you.
for having
Thank
us.
you.
Time
Thank
to
you
slip
for
into a
having us.
short break. Though we come back, we'll continue to focus on markets and on stock-specific action. Don't go anywhere.
Hey, thank you for watching this on CNBC TV 18. Hope you liked it. For more such interesting news and updates, follow CNBC TV 18 on all the social media platforms.